Can begin. So a very good morning to everyone and welcome to Shen Corporation Berhub's Q4 results briefing. I am Shuain from Image Jiwa Communications and we are the IR and PR consultant for Shen, and I shall be your moderator for today's briefing. Today's results briefing is part of Bursa Malaysia's Investor Relations and Public Relations project for selected listed companies. The IR and PR project is aimed to improve the visibility and accessibility of participating PLCs via more active IR engagements with the investment community. For the first phase of the project, Image Jiwa Communications has been appointed as a third-party IR company to train and educate participating PLCs to conduct effective IR engagements. The selected companies for the program are PLCs that are less accessible to analysts and investors, but highly in demand based on the feedback received from the investment community. We wish to thank Shen for participating in this project. The recording of the investor briefing and presentation slides will be made available for all on Bursa Malaysia Institutional Insights portal after the event. Today, we have with us Mr. Chan Kung Chong, Managing Director of Shen, and Louis Lau, Executive Director of Shen, who will bring us through today's briefing. Over to you, Louis and Sean.
Hello, hi, good morning. I'll do a very quick introduction and then a quick update on our financial results for the quarter. And I think after that, we will have the Q&A session. A quick overview of the business. We have been listed on Bursa Securities since 2004. The main business that we are in is in the design, development, and technology-driven manufacturing, operating in the Southeast Asian region. At present, we have got 4 factory sites, 3 located in Malaysia and 1 in Hanoi, Vietnam, and a global sales office in Singapore. We are mainly a contract manufacturer, but we produce goods for various sectors, including medical, industrial, consumer electronics, and home and lifestyle products. As a contract manufacturer, I think capabilities is very important for us. We mainly help our customers in mold design, stamping, injection molding, spray painting, surface finishing, and in recent years, we have entered into box build, packing and assembly for our customers. History of the company. Shen itself was incorporated in 1995. This is our 26th, 27th year of operating. However, I think through M&A, we have acquired Polyplus a couple of years ago, which Polyplus was incorporated in 1988. So we have got a rich 30 plus years of manufacturing experience. So in the last couple of years, 2015, 2016, we did the acquisition of Polyplus and also demand auction to grow our manufacturing space. Corporate structure, now we have got 4 main operating subsidiaries, as I mentioned before. I won't go into much details of this. Board of directors, Sean and myself, we are both here. We're the 2 executive directors of the company. We're both here today, and we're supported by 4 independent directors. Okay, business overview. As I mentioned, we are in the engineering and manufacturing solutions business. We provide outsource manufacturing services to our customers in various industry. We basically are part of their supply chain, where we will help them at the very early part of the business, and during the design stage. And we find that we get best value when we help them at the early stage, because we can help them design their products better and more efficiently for manufacturing. In areas where we don't have capabilities, we basically can help our customers source them, electrical components, PCBA, for example. Today, we have more than 200 injection molding machines across the 4 sites, and more than 80 metal fabrication machines in our metal facility. As mentioned, our industry coverage range across many different industries. Today, I think we will go into the breakdown later on, but I think it is quite good that today our sectorial diversification is quite wide. That helps us to weather through any disruptions in the supply chain or any customers. I won't go into the capability. As a global manufacturer, we basically are certified and have a lot of sustainability programs. I think in the last year or so, we got the FDA registered facility for our Penang plant, which has helped us to secure a couple more customers as well. Financial overview, I think the group revenue for 2021, our sectorial breakdown is still quite even. Industrial being the largest sector at the moment, with 46% contribution, followed by home and lifestyle products and office automation and data storage. We supply internationally, 24% to the US, 6% to Europe. The rest are in Malaysia and Singapore. I think there's an issue with the, no? Yeah, I think it's correct. 47% locally in Malaysia and 12% to Singapore. By factory, it is now quite high on our Penang plant, Polyplus, at 39%, followed by Jishan Plastic 30% and our metal factory at 20%. So last year, we closed the year at 240 million revenue, with a 13.1 profit after minority interest. The contribution was mainly because our customers increased their orders, as well as the fulfillment of orders by all the factories in the financial year 2021. Although the fourth quarter came down by 18%, fourth quarter we were quite disrupted by COVID and supply chain disruptions as well. There were quite a fair bit of material shortages, as well as our labor shortages, which is quite apparent in both Malaysia and Vietnam. However, I think on a full year basis, we managed to grow by 22%. And the growth we were quite glad that our customers were able to support us during this during the very disrupted year in 2021 as well. Profit after tax for the fourth quarter was better by about 29%. The overall full year we grew by 900%. I think 1.3 million to 13.9. Of course, PATMI it was 2.1 to 13.1 for the full year. I think the COVID disruption had a bit to do, had a lot to do with the financial result. We were very disrupted in the whole financial year. Customer orders were erratic, but I think we hope to see that the increase in revenue is sustained moving forward. So on a quarterly basis, I think this is our 7th quarter of continual profit. We hope that this can continue to sustain. Won't go into the balance sheet. I think as an overview, we now have 274 million in terms of assets, with equity of 118 million. Our net assets per share is 1.03, with a healthy current ratio of 1.1. Our total borrowings is 94.5 million, with our gearing ratio of 0.8 times. Minus of net of cash is 0.71 times. So key investment highlights. I think as a company we provide diversified manufacturing capabilities, ranging from metal fabrication to injection molding and importantly surface finishing and assembly. We are in constant engagement with our customers to understand what are their manufacturing requirements, and we will make specific investment in these capabilities. We believe that we must continue to invest to upgrade ourselves. For example, last year we invested in a 100K clean room and control room in Johor and Penang manufacturing facility, which has helped us to secure a couple more customers along the way. I think being very specific and having targeted investment help us to be able to grow with our customers. We still have quite a fair bit of growth opportunities in the pipeline. We have increased our capacity by almost 20% in our Johor facility and 10% in our Penang facility. We currently are, we do have spare capacity to be able to handle more customers. So I think that gives us opportunity for revenue growth in the future. As an organization, we also continue to emphasize on business development and having the ability to connect with our customers globally. I think with a couple of projects that we secure over the last 12 months, we will be able to then bring that into mass production in 2022. Our team have helped us over the last couple of years to turn around the business. I think the management team have grown quite a fair bit, and I would say that we will be able to continue and sustain this growth in the future. Moving forward, I think the successful vaccination rollout over in Malaysia and Vietnam have helped us to manage the COVID situation much better. I think we are looking forward to tomorrow, where close contact do not have to undergo such long quarantine period as well. So I think in terms of manpower and our ability to operate more normally will be much better. Labor shortages and supply chain shortages continue to be a challenge. We still have production issues relating to this, but I think hopefully in the next couple of weeks and months, this situation will normalize. The new projects, of course, will then kick off hopefully smoothly in 2022, and I think we will be able to increase our customer engagement in both in all of factory actually, but specifically in our Johor metal facility and in Vietnam. We are M&A opportunities. I think we are on the lookout to continue expanding overseas and expanding our growth trajectory. We are looking to engage better with our customers. I think we are a couple of interests at least from several parties. We are exploring and hoping to have M&A opportunities or have strategic partnership in the near future. Okay, I think that's all from myself.
Thanks very much, Louis. Very short and sweet presentation. So now we'll open the floor to Q&As. If you have any questions, we do have one in the chat box. So Andrew Sia from AM Invest. So who are your top 5 customers and what is the percentage contribution to your revenue?
Unfortunately, we can't disclose our detailed information about our customers. However, I think the top 5 customers contribute about 50-something% of our overall revenue. Okay, any more questions?
If anyone has other questions, please feel free to unmute yourself, or you can post your questions in the chat box and we'll read them out.
Hi, morning, Louis. This is Jiang from CAF.
Hi.
Hi. Can you just share with us in terms of the 2022 outlook in terms of the customers' orders and like any products that's going into mass production and the new projects ramp up?
Customer order outlook and sorry, you were saying customer orders outlook and
also, you know, any projects that's going into like mass production or the ramp up in the projects.
Yeah, I think customer orders outlook has been quite volatile over the last 12 to 18 months. You know, we get rolling forecasts from our customers, and then, you know, when it comes to the day or the month, then we'll get actual PO and full plan and things like that. I think, you know, it has been the same over the last 18 months for us today. The order forecast is strong. However, again, it depends on actual situation on the when it comes to it lah. I would say, you know, we expect 2022 to be quite consistent with 2021. In terms of mass production, we do have certain projects which will come into mass production in 2022.
Sorry, when you mentioned that it's going to be consistent with FY21, that's in terms of the revenue growth versus FY20, or how should we see it?
I'm not sure if I can go into specifics. Maybe Shen, can you guide me on this?
I think more of like if you it's okay to provide some sort of guidance in terms of your outlook lah.
Okay.
So that, you know, people can understand more in terms of where Jishen is going. It should be fine.
Okay. So yeah, I think in terms of growth rate, we are working towards the same sort of growth rate for in 2021 for 2022. So that's, I think, you know, as a general guideline, as a general KPI that we put on ourselves, that's what we hope for lah. But of course, you know, it comes down to the actual situation on the ground. Like for example, you know, COVID cases has increased quite significantly in Malaysia and also in Vietnam. So that sort of disruption distracts us on a short term. But I think in the medium term, the overall trajectory is there.
Okay, so is it fair to say that so long as the disruptions ease, the order outlook is still pretty optimistic?
Yeah.
Okay, then when you talk about the fourth quarter results, it was affected by some disruptions. How do you see this coming into 2022 so far?
I think supply chain disruptions really impact the ability to plan effectively. For example, you know, if we have a line of people or we've got workers that are willing, ready, and able to work, but then on that specific day we can't get materials, then, you know, it will disrupt and the productivity and efficiency of our overall factory. Other disruption, you know, like for example, if we don't get materials, we can't produce, we can't get the revenue. This sort of disruption, you know, has impact on us. But I think being in this for more than a year, we are starting to be able to plan better, and I think, you know, having managers, you know, our management team who is on the board is very important, because then we can be more flexible in terms of our planning and our ability to turn things around.
So, like specifically when you mentioned about, you know, those semiconductors or resins or steel shortages or labor shortages, is it getting better or still is quite disruptive into 2022 so far that you guys have seen?
On certain days, certain weeks is better. On certain days, certain weeks it looks like, you know, it's back to what it was. I don't think it's going to be pre-COVID situation anytime soon. Of course, you know, what's happening globally, I foresee that they will, with the war and things like that, I foresee that there will be a disruption coming again in the next couple of weeks. So I think we can only just wait and see and manage as best as we can.
Okay, just maybe one more question from me before I get back into the queue. In terms of margins, I think the fourth quarter there is a reversal of inventories written down. Maybe can you just explain what's the nature of that? And excluding that, I think the Jishen's net margin seems to be stabilizing around 5% for FY21. Is that sort of the expectations moving forward, or do you see scope for higher or maybe lower moving forward? Thanks.
Okay, on inventory, reversal of inventory written down, we have a general policy of doing general provisions along during the year. That's in line with accounting best practices lah. So what we will do is we will do two or three times a year an assessment of our inventory, and if we manage to dispose or we manage to sell it, then we will do a reversal of that general provision. On the other question about margins, I think as revenue increase, we hope that we will be able to improve margins slightly. But otherwise, general manufacturing margin is around there. Where we get margin expansion is where we are able to scale better. So because the fixed overhead is the same, then we get operational leverage when we scale revenue.
All right, thanks.
Thanks.
Thanks, Jiaying, for the questions. So we have a follow-up question from Andrew. He asks if you could share the end products for the industrial, home, and lifestyle segment that contribute to your revenue.
I think we have got a slide here that shows it. Okay, so I think the end products, we are contract manufacturers and we supply different sectors, different industry. But here are some of the example of products that we produce for the end products. Things like medical that we have done, things like hearing aids, ADs. I think over the last year we did a project where we supplied the housing casing for a ventilator and things like that. So there are different products that we produce for. Yeah, so industrial, home and lifestyle segment. Home and lifestyle segment, there are things like fans, vacuum cleaners, smoke detectors, so on and so forth.
Okay, I think moving on to the next question. So Glenn asked if you could share the current utilization rate of the group's manufacturing capacity.
Current utilization rate is maybe about 50%. Bear in mind this is also a short month, and we are very heavily disrupted by COVID as well. Okay.
Does anyone have any further questions?
Hi, Louise, just to clarify, the 50% is the current utilization or the fourth quarter utilization?
Current utilization.
Pardon?
Current.
Current. So how about the fourth quarter utilization?
Fourth quarter is a little bit better, but not a lot better.
Okay, so actually, based on say what you have discussed with your customers in terms of the ramp up and all, maybe could you guide us in terms of the expectations of utilization rate for FY22 and maybe beyond?
I think if all projects ramp up at the same time, we will be at 70 to 80% utilization. So then we will have bottlenecks in several different areas. That hasn't been the case over the last 12 months, fortunate enough. So I think we hope that we will be able to be in that situation again. But I think I think another question asked about planned capex. So we will be investing in areas where we have bottlenecks and we need to bottleneck to be able to have a more smooth production. But otherwise, 70-80%, I think that's where we are looking at.
Okay, and then I recall in your slide you also mentioned about potential M&A opportunities. Could you just share with us like what are the areas that you guys are looking particularly at, and is that a priority right now compared to say your own capex or your own other plans?
I think M&A opportunities, when the probability of an M&A happening is very small. However, if an opportunity does come and it does make sense for the group, we will take serious consideration into it. Where I think we can grow is we are looking to areas where it can complement the group. For example, somebody who can help bring lots and lots of customers, for example, something that complements us and we are able to have a more holistic capability offering to our customers. That sort of M&A, something that is complementary, maybe with the same capability that we have at the moment, or something that complements. We're open to that. At the moment, a couple of interested parties, but I think it is very early stage. Just something for us to look out for, and something that we are working on in the near future. It may or may not happen. So it's a space where we are looking at.
All right, thank you.
Thanks, Jiaying. So Adrian asked, what is the planned capex for 2022?
Planned capex for 2022, we actually don't have a lot. It's not like in 4 or 5 years, 3 or 4 years ago, where we had a lot planned. Most of the plan this year are in continuation of what we have started earlier. We are looking towards like, for example, we've spoken about it, the solar panel projects and things like that. Those are already happening, but not completed yet. So a lot of these projects are going to be completed in 2022.
All right. Hope that answers your question, Adrian. Frank has a question. Moving on to, perhaps you can go to slide 12. So which industry among those listed has the largest share of revenue? And for utilization, what's the outlook for the next 12 months? How many new customers and the industry challenges?
I think industrial sector is largest at 40-something%. I think it is on this slide. Where is it? This slide here. 46% for industrial customer, utilize, followed by home and lifestyle 20%, and office automation and data storage at 16%. Utilization, I think as I mentioned, if all our customers ramp up, we hopefully hit 80% utilization. We have a handful of new customers onboarding. Existing customers are also inquiring about new projects and things like that. So I can't actually put put an exact figure on how much. But you know, there are new customers, and there are also existing customers who are looking to give us more projects. Industry challenges. I think industry challenges. The biggest challenge, of course, is COVID and supply shortages. As I mentioned, you know, if say for example we need to manufacture something, and on that particular day we don't have materials, we won't be able to sell. So that gives us a lot of pressure in terms of being able to put everything together. Of course, I think the other thing is the longer working capital cycle. We need to have a lot more inventory as compared to previously, because we need to plan for any contingencies. So these are a couple of challenges that we have.
Thanks, Louis, and hope that answers your question, Frank. Hong Jin asks, may I know how much does Shen spend for R&D each year?
We don't have our own products, so in terms of direct R&D into products, we don't spend on that. What we have is we help our customers with tooling and mold making and things like that. But all these are charged out to customer on a project by project basis.
Does anyone have any more questions?
Hi, Luis. Can you just remind us what's your current labor force across the group, and how many of them are foreign labor?
Across the whole group, we have around 1,200 workers. Foreign labor in Malaysia, we have I think about 1,000 workers. Foreign labor is about 600 to 700 workers.
And you know how many percent are actually on minimum wage, or yeah?
I'll say maybe about 70% our minimum wage.
70% of 1,002?
No, 70% of the 700.
Of the 700.
Yeah.
Okay. So let's say if in the situation when your utilization rate are being ramped up to say 70 to 80%, would this 1,002 suffice, or how many workers roughly do you will you require?
I think at the moment we are very actively looking to hire workers. We do have labor shortages persisting in all our factories. So we are looking to increase our headcount. How many headcount? Maybe 200 to 300 more workers across the whole group.
Okay, thanks.
Any more questions from the floor? Okay, if there are none, then I think we can end this briefing. Thank you very much, Louis, for the presentation. And thank you very much, everyone, for joining this briefing. Before I close it off, do you have any final words, Louis? Any closing remarks?
No, I don't. Sean, do you have?
Just that it's an interesting time right now for us in the manufacturing industry. There are opportunities, which are opening up ahead of us. Of course, the risk is pretty well known, which we have encountered most of through 2021. The macro factor of the relocation of purchasing away from China continues to favor Southeast Asian manufacturers, and hopefully with the resolution of some of those challenges that we are facing that Luis mentioned, hopefully on the medium term, we will be on a better growth trajectory. I think that sort of is like my closing summary, if I can. Thank you.
All right, thank you, Sean.
Thank you.
All right, thank you, everyone. If you have any further questions, please feel free to reach out to us at Image Jiwa Communications. On behalf of Shen and Bursa Malaysia, thank you very much for attending today's briefing. Take care and stay safe, everyone.
Thank you.
All right, thank you.